did get the perfect bounce on the trend line, and I've got some data today that shows that this bounce may not be finished. In fact, I have some other data, completely different data, that shows that Bitcoin may get to 40 or 41,000 just before Friday. And the real bounce is actually not even happening in Bitcoin. The real bounce is happening in the altcoins. And I'm going to show you today what the biggest risk to your altcoin portfolio is. And it's not a risk that you expected. That's not a risk that you expected. I'm also going to show you why there is a small chance, maybe not that small, maybe a bit bigger chance, that the US actually wants these increased tensions between Russia and Ukraine. I'm going to show you the data that actually backs up why the US may actually want this. So it's going to be one of our biggest shows. In fact, I think it's going to be the biggest show that I've done today. Let's get this show on the road. Let's do it. All right, you wanted quicker intros. You wanted us to get straight into the meat and potatoes and to do it quickly. And so we are doing what you said we should be doing. We're going to get quicker intros. Where did we get that from? Well, on my Twitter, or on Crypto Banter's Twitter, we gave you permission to roast us and just tell us what we're doing right and what we're doing wrong. And one of the things you told us we were doing wrong is that you said the intros were too long. So here we go, much shorter intros. Let's get into straight into the degen. That is what you guys want. You want degen straight away. If you're new to our channel and you are a degen, welcome. Subscribe to our channel. Join the Banter fam, the fastest growing, most loyal community in the entire cryptoverse. This is where we are big boy pants, and we're with you through the bull markets and the bear markets. All right, let's do this. Let's get straight into it. No foreplay. Let's get right into it. We don't do foreplay anymore. That's it. Tell my wife no more foreplay. We're going straight in. We're going straight in for the kill. And we're going to talk about, everyone's saying yes. We've got a lot to talk about. We've got a lot to talk about today. We are going to talk about the perfect bounce on the retest. And I said yesterday that until Bitcoin misses or until this trend line is broken, I'm working under the assumption that we're heading in for the perfect retest. And we had the perfect retest. What I didn't realize at the time was that not only was this a technical retest, but it's actually also one of the biggest retests that Bitcoin has had on its fundamentals, on the on-chain data. When I was looking at the technicals, I was just focusing on the technicals. But the truth is there was actually another battle that was being fought, and that was on the on-chain data. You can see this tweet here from Lex Moskovsky. He says Bitcoin is sitting on the fourth biggest on-chain resistance support of all time. And that was at 38,000 yesterday. So that was at 38,000 yesterday. And the reason why that is such an important resistance level is because that is the unrealized, the UTXO, the realized price. And this is the price at which a lot of long-term holders would have started to realize losses. So you're now getting a point where there was an on-chain debate, battle, and also a technical battle. And it looks like Bitcoin bounced exactly on the trend line. And that bounce actually corresponded with news. We finally got some news, and the news was, of course, around the Russia-Ukraine tension. So finally, yesterday, what we can argue technically yesterday is that yesterday was the first day of the Russia-Ukraine invasion. It was, I suppose, the first time that you had the Russia-Ukraine invasion. Putin declared the two Ukrainian regions as independent regions, and then he sent in his troops as a peace convoy. He said, look, this is a peace mission into these two areas in Ukraine that we've just decided are actually independent territories. And that was effectively the first part of the invasion. And for the first time, the West responded. And the West responded pretty firmly. We saw that yesterday. Let me show you exactly what happened so that we're all on the same page.
Defending freedom will have cost for us as well, and here at home. We need to be honest about that. But as we do this, I'm going to take robust action to make sure the pain of our sanctions is targeted at the Russian economy, not ours.
That was President Biden announcing new sanctions on Russia after tensions rising in Ukraine. Kayla Tausche joins us now with the latest from Washington. Good morning.
Good morning, Andrew. The Kremlin vowing to hit back at the West after a coordinated wave of sanctions on Russia that limits access to U.S. and European financial markets, activity by two Russian banks with about $80 billion in assets, 5 elite individuals and their families who are deemed close to President Putin, and the operations of the Nord Stream 2 gas pipeline to Germany. The package, which President Biden called the first tranche of actions, notably stops short of limiting oil and gas exports, cutting off high-tech exports to Moscow, or blocking its access to SWIFT payments, all of which could impact consumers. And while Biden also held out a shred of hope for a negotiated resolution, his top diplomat, Secretary of State Antony Blinken, said there would need to be a reversal of Russia's actions, canceling a scheduled meeting with his Russian counterpart, citing the invasion.
Now that we see the invasion is beginning and Russia has made clear its wholesale rejection of diplomacy, it does not make sense to go forward with that meeting at this time.
In the last 24 hours, NATO countries have added thousands of new troops to Eastern Europe and the Baltic states to counter Russia's more than 150,000 troops surrounding Ukraine. A Russian separatist leader said military mobilization is gaining speed, but not yet at the stage of claiming new territory.
All right. So bottom line is that the US is basically saying, look, there's going to be no more discussions with Russia. We're not going to go and have that tripartite summit that we spoke about because actually, effectively, Russia has now physically invaded Ukraine. And now the US has responded and the allies have responded with sanctions. And it's not a lot of sanctions, but they have started with very limited sanctions. And it's probably almost like a show of strength to say to Putin, look, Putin, if you want to do this, if you want to continue this, there's going to be no further negotiations, and we are going to hit you with sanctions. And it hasn't been sanctions against key things like gas and oil and stuff like that. It is just a first round of sanctions. And for the market, what that meant is that there's finally certainty. So we can, if we look at the chart that we looked at yesterday, the one that says, look at the invasion. So you look at like when the invasions happened, and usually that was some kind of bottom. So when the invasions happened, that is some kind of bottom. We can technically say that yesterday was the first invasion. It wasn't a full-on military invasion with casualties and artillery and stuff like that. But it was an occupation. It was Russia effectively did occupy certain sections of the Ukraine. So as we look at these charts, technically, we can say that there has been an inflation, an invasion. We can say that it has been terrible for the Russian stock exchange. You can see again the Russian stock exchange going down, and effectively that is where we're at. That is where we're at. We've seen the invasion. We've seen this all happening, and now effectively the market has what it wants. The market has some kind of certainty, and that's all the market wanted. The market wanted certainty. It got its certainty. What has the certainty done? Well, the Russian stock exchange is down, but the S&P 500 up another 0.5%. The Dow Jones up another 0.5% today. The QQQ or the US tech stocks also up about 1/3 of a percent, and Bitcoin up from 38,000 to 39,000, which is exactly what we were expecting. We were expecting some kind of bounce, and that happens on the week where the big options closeout is. Because remember that this week is the big options closeout. This is the month end week, and we've got the big options closeout. And the big options closeout actually happens at the point of max pain for this week is $41,000. So today, the point of max pain is $41,000 or $40,000. So it's between 40 and 41. I looked at it about half an hour ago. It was $41,000. So you're looking at a point of max pain in between $40,000 and $41,000. Right now, Bitcoin is trading at $39,000. Look, it's not the end of the week yet, but when the end of the week comes, I think that we will be closer to $40 or maybe even $41,000 if you look at this data. Now let's look at the Russia-Ukraine situation and ask ourselves a question. Is there any reason that Joe Biden and the USA would actually want these tensions in Russia and Ukraine to continue for at least for a couple of months? Is there any reason in the world that this would happen? I'll show you a few reasons why I think that maybe the USA does want these invasions or these tensions to continue for at least another 6 months. The first thing is this tweet that I saw that says, Joe Biden, people are thinking you may want to provoke a war to take the focus off your dismal poll rating. So but constantly picking at one country in the world that has many nuclear weapons as we do is not smart. Most of us don't want to risk the Stone Ages again. So maybe it is as a distraction around his dismal poll ratings. We know that Biden has the lowest poll ratings that any president's had for a long time. The other reason why Biden may want these tensions to continue is it was actually in his speech last night. And if you listen to his speech, and I want to play a certain part of his speech to you guys last night, where he imposed the sanctions, listen carefully, and then we'll talk about why Joe Biden, why the US may actually want this. They may actually want this. Let's listen.
There is no justification. Further Russian assault in Ukraine remains a severe threat in the days ahead. And if Russia proceeds, it is Russia and Russia alone that bears the responsibility. As we respond, my administration is using every tool at our disposal to protect American businesses and consumers from rising prices at the pump. As I said last week,
rising prices at the pump.
Defending freedom will have cost for us as well.
Defending freedom will have costs.
We need to be honest about that. But as we do this, I'm going to take robust action to make sure the pain of our sanctions is targeted at the Russian economy, not. There is no justification.
There will be costs. We will feel the pain. We will feel the pain at the pumps. There will be costs. But I am going to try and do everything that I can to make this easier for the US. He's warning the US around costs. He's warning the US around higher prices, specifically higher prices at the gas pumps. Now, an increase in the petrol price and the oil price would effectively mean an increase in the price of most goods, because most goods rely on gas or petrol or oil for getting into the stores for production and stuff like that. So if we go into a period where there are high gas prices, what we can expect is a much higher inflation. And what you can see is that gas prices today are the highest that they've been for a long time. That's a chart of the gas prices. Here is a chart of the oil price. And if you look at the oil price, in December, the oil price was $62. Today, the oil price is 50% higher. That same oil represents the price of manufacturing and the price of getting goods to stores and moving goods around. And it's a major component in inflation. So in an election year, now remember, this is an election year in the United States. So in an election year, if you were Joe Biden and your ratings were very much down, you would probably look to keep the economy going as strong as possible, right? You'd want to make the economy go as strong as possible. How can you make the economy grow as strong as possible if there is a threat that because of high inflation, you're going to be forced to increase interest rates? It's very tough. However, if you start blaming the cost of the increase in costs to the Russia-Ukraine scenario and the supply chain crises as a result, then you can justify not having to raise interest rates as quickly as you were. And what we're seeing already is that narrative is starting to play out. The US economy has been hit with increased gas prices, inflation, and supply chain issues due to the Ukraine crisis. So they're not blaming it on money printing anymore. They're blaming it now on the Ukraine crisis. That's why prices are going up. Not because the US continues to print money, as we can see over here, not because the money supply continues to increase. Even in January, the money supply increased by another 1.14%. In December, it increased by 1%. So it's not because we're increasing the money supply. The new narrative now is that the inflation is because of the supply chain disruptions because of Ukraine. That is the new narrative that is playing out. Now, if that is the narrative, then maybe when the Fed meets in March, maybe they're not going to be as aggressive as in the interest rate increases. And remember, this is an election year. So if you look now, despite the rising geopolitical risk, the Fed futures based on CME Watch still show the odds of 34.7% for 50 basis point rate hike. That number was as high as 85%. Now it's back down to 34%. There's a 34% chance that there's going to be a 0.5 basis point rate hike. So if they can blame the increase in costs on Russia and Ukraine, and you can see that this is the total commodity spot index also increasing because of this, then maybe we don't have to increase the interest rates as aggressively, because this is not about an overheating economy at all. This can be argued. It's not about the money supply and an overheating economy at all. This is actually about something completely different. This is about the war, and the war will pass. And if the war does pass, then Joe Biden gets not to increase interest rates. If we don't increase interest rates, the economy continues to run. People continue to feel rich, continue to feel like they have money. And when people continue to feel rich and continue to feel like they have money, well, then they have no incentive to vote negatively against the current administration. Generally, when people feel good, when people are earning money, when the economy is good, when stock markets are running, then people believe that the government is doing a good job, and people don't want to vote for change. But in an economy that's bad, if they start cutting the economy just before the elections and they start slowing down the economy just before the elections, then people start to think, hold on a second, maybe let's vote against the current administration. And that is, I think, what's going on here. That is, I think, what's going on here. I think that there's Russia, Ukraine, there are tensions, but I think the US may not have the best incentive in the world to curtail the tensions or to curtail them quickly. They'll probably want them to last until the elections. I don't know, call me a conspiracy theorist. I don't think I'm a conspiracy theorist. I think that's what's going on. But I mean, that's what all conspiracy theorists think. They think that's what's going on, right? That's what it is. Alrighty. I don't know if this is relevant, but probably worth mentioning. So we did see the UK Prime Minister Boris Johnson saying that we will be stopping Russian companies clearing in sterling and dollars. And we did also hear in the speech that Biden made, he said something along the lines of, he said, we haven't gone and limited SWIFT, we've just done the following. And at the same time, Russia, the Russian Ministry of Finance submits a Bitcoin bill proposal. It's quite kind of, I mean, the timing is a little bit uncanny. But I guess that is what it is. Let's see what happens. For now, we'll keep our eyes on it. But the most important thing to see is that the market is no longer reacting to Russia-Ukraine news. No matter what happens now in Russia and Ukraine, the market's kind of brushed this thing off. It's like, you've attacked, you've got certainty, now let's move on. The market is looking for a new narrative. And in about 2 weeks, we've got the Fed meeting. And the Fed meeting will decide about interest rates. So I think this is maybe just a build-up to the Fed meeting before the interest rates. All right, now I want to talk to you guys about the biggest risk to your crypto portfolio. And it's actually not what you think. It's not what you think. The biggest risk to your crypto portfolio is right now probably not being invested. If you're not fully invested right now, I think that is probably the biggest risk to your crypto portfolio. And I'll show you why. Because the psyche, unfortunately, this is a great tweet around the psyche, and it says, Bitcoin, 65K, let's buy the dip. 60K, let's buy the dip. 50K, let's buy the dip. 40K, let's buy the dip. 35K, okay, let's go short. Let's sell. Yesterday, everybody was panicking, and everybody everyone was talking around selling their Bitcoin and maybe buying it cheaper. And even when we spoke to Rudo yesterday, Rudo said the same thing. He's like, okay, if Bitcoin goes below a certain level, then I may start selling. And my thesis or my argument to him was, well, hold on. The risk return as Bitcoin gets lower, the risk return benefit, the benefit of taking more risk is so much increased when the prices are down that it would probably be the worst time to sell. And so the biggest risk that you have to your crypto portfolio right now is probably not being invested. And I'm sure that you guys have seen this. I've spoken about it many, many times. But if you take the returns of Bitcoin every single year, but you exclude the top 10% of days. In other words, the top 10%, the top 10 best days. If you take the top 10 best days and you remove them, so if you take the return, you get 660%. But if you remove the top 10 days, you get a negative 199%. And you can see with this chart that not being in the market for the top 10 days is the worst decision that you can make. And the problem is that you can never, ever time the market. You never know when those top 10 days are going to come. But if you miss those days, you're going to miss the majority of return. And you may be in a time where if you are invested in the top 10 days, you get a plus 66%. But if you're not, you're actually going to get a minus 140% return. And in 2013, if you were invested, you got a plus 660% return. But if you weren't invested, you got a minus 199-day return. And that just shows the importance of not actually trying to time the market. And that's not only the Bitcoin market. I mean, these are the results for Bitcoin. If you take this and you look at the results of being fully invested in the S&P 500, you would have taken, so shows a survey if you missed the best days from 1999 to 2018. And you can see with the traditional market, it's exactly the same. If you were fully invested, you got a $30,000 return. If you missed the top 10 days, that return halved. If you missed the top 20 days, that return halved. If you missed the top 30 days, that return almost halved. And so the numbers continue to get worse and worse. So the story, the moral here is that you've always got to be invested. You've always got to be invested because you can never time the market. Okay, but let's say that you are not invested and you want to understand whether it's a good time to invest now or not to invest now. Because the prices have come down so much, because the prices are down so much, it means that the risk that you are taking after a correction like this is substantially increased, that you will miss the days. And we saw that. We saw how quickly the altcoins recovered today. So if you think Bitcoin had a good recovery today, look at the altcoins. You get altcoins like Terra, which we'll talk about in a second, up 13%. Avalanche up 11%. Let's maybe go into some of our portfolios. So T-Shares up 28%. Vader up 24%. Platypus Finance up 16%. Injective up 15%. If you would have missed yesterday, if you would have got out yesterday and you would have missed yesterday, well, you would have missed 15-20% in some of the biggest altcoins. And now the question is, you'd be sitting here and going, well, should I be buying here? That's the problem. You cannot be trying to time this market, specifically not this market. You want to time a market that's near the top. Don't time a market that is almost near a bottom. Now we've had with Bitcoin, the reason why I say it's so dangerous to time this market is because not only have we had a, call it for numbers sake, a 40%, the Birdie's coming. For all of you who want the Birdie, I'll read you what the Birdie said word for word. It's on my Twitter when we get to 3,000 likes. So if you want to try and time a market up here after a bull run. But to try and time a market when we're near the bottom and where there are a whole lot of other things is a huge mistake. And I'll show you some of the other things that show me that right now is not a good time to be trying to time the market. Right now is a time to be fully invested or close to fully invested. You may be wrong, in which case you'll just have to hold a little longer. But to try and time this market when A, the market is down 40%, B, you've had gold in the last month increasing by 12%, okay, rushing back towards its all-time high. And this is in response to the Russia-Ukraine tensions. Now, the last time that we had some kind of global crisis, I showed you guys yesterday that gold responded first and then Bitcoin responded. And that was in March 2020. So if you look at March 2020, gold dipped and gold recovered within a month. Bitcoin dipped in March 2020, but Bitcoin took about 3 months to recover to the pre-COVID levels. So what we see is that in times of global crisis, what Bitcoin starts to do is Bitcoin starts to follow gold. Now, where are we right now? Right now, we're at a point where the correlation, look at the correlation between Bitcoin and gold previously. We're at a point where Bitcoin has been going down and gold has been going up to the extent that now, for the first time in a long time, we're actually seeing a negative correlation. We're seeing a negative correlation between Bitcoin and gold, which is crazy. And we can see that investors have now rushed to gold in this Russia-Ukraine crisis. What happened last time when there was a global crisis is that they first rushed to gold. When gold got expensive, they started rushing into Bitcoin. So one of the reasons why you don't want to be uninvested right now is because we've seen a huge inflow into gold. Here we go. These are the numbers. This is the numbers into the gold ETF. And Bitcoin hasn't had the same run just yet. And so this is a reason that if Bitcoin and gold have decoupled and they will start coupling again, you may be in a position where Bitcoin shoots up like an elastic band to try and catch up to gold. And if that happens, then you're going to miss it. That's a bad time to be uninvested. What we are seeing, though, is that we're seeing that up until now, Bitcoin has been correlated to growth stocks. In fact, a key young Jew, he said that he said that the Bitcoin correlation to the S&P 500 is super high. And so what that means is that institutions are starting to play here. And you can see that as well in the on-chain data. You can see that yesterday, a whale or two whales, someone staked and bought $75 million worth of ETH. And then again today, another 22,500 worth of ETH. Those are institutional players who are buying the dip. And then what they're doing is they're staking the ETH. So right now, the smart money is buying the dip, putting it into ETH, locking it up into the ETH contracts and earning their 5, 6, 7, 8, 9, 10%. That is the first bit of data to show that why you don't want to be uninvested right now. Because if Bitcoin tries to find its correlation to gold again and you're not in that market, well, you're going to pay a high price for not being in that market. Then we're seeing something else happening. We're seeing something else happening. And it's all here on this chart over here. Here we go. So the chart says, this is the chart of the stable coins on exchanges. Now, look at the stable coins on exchanges. Haven't been this high since November. In fact, I'll show you in a second. But that is the stable coins sitting on exchanges. They're $29 billion on exchanges in stable coins. Okay, what does that mean? Well, those stable coins are sitting on exchanges waiting for an opportunity to buy. That is what those are doing. And if you look at the stable coins relative to Bitcoin, which is what they call the stable coin supply ratio, look at the stable coin supply ratio, higher level of stable coins on exchanges available than the July bottom and nearly 4 times the expression of bids versus ask on cumulative spot order books. But some of the same people who bet the farm in November now capitulated and are dreaming to rebuy lower. So what they're saying is these stable coins are on exchanges. The data is that the stable coins are on exchanges. And I agree, a lot of them could be miles of stable coins, but they're on exchanges and they're getting ready to buy. That's for sure. They're getting ready to buy. Will Clemente says the same thing. He says a really interesting chart that I just found comparing the amount of stablecoin on exchanges to Bitcoin's market cap. That's what I'm calling the dry powder ratio. Currently at an all-time high, which basically means that there's a whole lot of dry powder ready to be deployed. Now, what's going to happen is the dry powder is going to be deployed pretty soon because it's sitting on exchanges. And if it is deployed and you're not in the market, then you're going to miss the biggest opportunity of your lives. You're going to miss, if the market goes up, you're going to land up missing these days. You're going to land up like the S&P investors that missed the top 10 days and lost 50% of their returns. You got to make sure that you're invested right now. If you're not invested right now, I think you're making a massive mistake. Massive mistake. All right, let's see. What else is there? I mean, we also see that the supply shock is increasing because these whales that have been buying have been putting the Bitcoin on the illiquid supply. They've been locking it up. And so you're getting this combination of on-chain data that's showing you guys that there may be a bounce. Now, the last time that I saw the data looking this good was in July 2021. That was the last time that I saw this. Alrighty, let's get into altcoins because I think that's what everybody wants. Everybody wants to know about the Birdie and the Luna season. And we did have some good news yesterday for Luna. The news yesterday, for those of you who haven't read it, for those of you who've been living under a rock, well, the news is around the Luna Foundation raising a $1 billion amount. They did this by selling Luna, and they're going to use the amount to create a Bitcoin reserve. Now, that Bitcoin reserve is going to be used to protect Luna. It's going to be used to protect the peg, the UST peg, and thereby protecting Luna. There is a tweet that I suggest that you guys go read. It's quite a long tweet. And the tweet is by WestieCapital. He explains why this is such a big move. But the nutshell of why this is such a big move is because if UST loses its peg, then people panic. And what they do is they sell their UST. And if they sell their UST, then effectively what happens is they have to create more Luna. And then Luna loses value. And as Luna loses value, well, there's a bank run on UST. And it's kind of like a death spiral. They call this a death spiral. But by raising this $1 billion fund, which effectively now represents about 8% of the total value of UST in the market. $1 billion right now, and there's about a $12.5 billion total market cap for UST. So what you're seeing now is you've got a $1 billion fund that these have created to just protect the peg. And if they protect the peg, you're going to get to a position where this death spiral or this run is not going to happen. The other thing that we read in this is that we look at the investors that actually invested behind this. So the investors that were the investors in this $1 billion round were investors like Jump Capital, Jump Crypto, Three Arrows Capital, Republic Capital, Tribe Capital, Defiance Capital. So these are big investors. These are investors that are also going to be around to protect Luna if anything should happen to Luna. We saw what Jump Capital or Jump Crypto did when the Solana wormhole bridge was attacked. They came up and they said, look, we'll make whole, we'll pay this hack, we'll pay the $300 million. And now you're getting the same cohort of investors buying this $1 billion Bitcoin fund or Bitcoin treasury that Luna can use to protect its peg. The same people behind this. And not only now have you got big pockets behind this, but you've also got a fund to protect the peg of Luna. Now, up until now, Luna was strictly pegged by the algorithm. Whenever you mint new Terra, you burn Luna, and the other way around. Whenever you destroy Terra, you create more Luna. Now we've got this fund which is there to protect it and to avoid the death spiral. So it's huge. It's massive, massive, massive news. And I want to show you what's happening right now on Anchor Protocol, because we spoke about Anchor Protocol a while back. The total value locked on Anchor Protocol has increased significantly. In fact, the total value locked is 11.2 billion. That total value locked was at 5.5 billion just a few weeks ago. Now, the total value locked is at 11.2 billion. And interestingly, what you can see, and I'll show you this again, if you look at the total market cap of UST. So let's take the total market cap of UST. You see the total market cap of UST, which means the total UST in circulation is 12.269 billion. Of that 12.269 billion, over 50%, in fact, about 70% is now deposited here in Anchor Protocol, earning a yield of 20%. So we've got this protocol is exploding. There's $7.2 billion, and the yield reserve, which is the reserve that was created to be able to pay yield when there weren't enough, when there was an imbalance between deposits and loans. Well, the reserve is now at $493 million. And at the current rate, the protocol is burning about $2 million a day. So $2 million a day, there's a shortfall. And if the current rate continues, then Anchor Protocol pretty much has about a year's worth of runway to let the protocol stabilize. Now, remember that Anchor Protocol is going to start adding collateral around Solana, around Avalanche, and around a whole lot of other assets, which will increase the collateral list. So that's also going to happen. So you take that and you couple that with the news of this $1 billion Bitcoin-backed fund. And it does feel like if the market was in a good market, Luna would absolutely explode. Now, we have seen somewhat of an explosion of Luna. I mean, Luna's up at $60. It's up 13% today. But I don't think that the market is fully pricing what actually just happened here. Because the major protocol here is well-funded again and is able to pay 20% interest at this rate for at least another year. You've also got a fund protecting the peg. And then you've got Astroport. Astroport is the big DEX, which is happening, which is live on Luna. And up until now, there has been very few things that you can do with your Astro tokens. There's no way to stake them. You basically got these tokens, which were launched by Delphi Digital. This project was launched by Delphi Digital, which are amongst the smartest people in crypto. The project was launched at a price of about $2, more or less. I paid about $2 for the first tranche. And then the price of Astroport dropped. And this is where the Birdie comes in. So let me show you what happened to the price of Astroport. That's the price of Astroport. And it went from about $2 and it dropped to, well, it's now trading at about 79 cents. I think the news is starting to filter into the market, but not fully inside the market. So there we go. That's when we all bought between $1.50 and $2. Price went down to 69 or 70 cents. And that's because there's absolutely no use for the Astroport token. There's absolutely no use for it. You can't stake it. There's no APYs, there's no APRs, there's nothing. However, now this is where the Birdie comes in. I'm going to read you the message from the Birdie. I'm not going to show you who the Birdie is because then the Birdie the birdie can go to jail, or no, they won't go to jail, but you know what I mean. So the birdie says as follows, it says, hey, Run, there is Astroport Birdie with some actual news to come. If you want to mention it to the Banter fam, you're more than welcome to do so. There's two reasons. The first reason is the new audits, which postponed the VX Astro contract to go live, are due today. If there are no major funding, this will be announced, and single asset staking will finally start. So all of a sudden, you're going to get single asset staking on Astroport. And if you get single asset staking, then there's going to be a high demand for it because people are going to start losing yield. If there are findings, then of course they're going to have to fix the findings and probably wait another week. There is also a growing amount of protocol-generated Astro waiting in the smart contract, which will be activated to market buy Astro shortly after VX Astro goes live. As of now, it's about a $5 million, and you can calculate the price impact. So there we go. That's what the birdie's saying, and the birdie's giving us great news here. A, the contracts are about to be audited. Who is the birdie? I'm not going to say who the birdie is. I'm going to tell you who the birdie is. If I tell you who the birdie is, and birdie won't be a birdie anymore, then BitBoy will start using the birdie. We don't want to give BitBoy the birdie. We don't want BitBoy to start knowing who our birdies are. So my feeling is go and have a look at Astroport. I'm not sure if it's, I mean, the information is good. It checks out. I've looked at it. I've been waiting for it. Yeah, the information is super good. The information is super good. So I've tested it. It makes sense. I'm not saying go and ape in on Mexi. I'm saying keep your eyes on it. I know what you guys are going to do. You're going to go and destroy the price on Mexi. Don't. Buy slowly if you're going to be buying, and see if this thesis plays out. All right. One more bit of news before we go today, and that is for Cardano holders. Cardano has been in this constant down. I did find this today. Cardano Shark addresses holding 10K to 100K. Cardano have historically done a pretty outstanding job at calling tops, and over the past 5 weeks, his addresses have added 6% more of the overall ADA supply. And so basically, this means that if these guys are right, and historically they have been right, we can expect some kind of move to happen in Cardano. And I think again that Cardano is overdue a move. So we've had Cardano on the down for a long period of time. It is up 5.5% today, but it's still under $1. It's still under $1. And usually when this happens, I think we're going to get a price rise. So look out for a catalyst pretty soon. Sheldon showed it this morning on his show. He showed how the chart may break out. And yeah, that's it. All right, quickly before we go, Hustle in his new apartment. What's on the show today, brother?
We're going to take a look at a new game that just launched. It's called Cyball. It's a soccer football type of game, so I'm excited to talk about that one. It's like a turn-based soccer game. It's actually really sharp. I've been playing it quite a bit, so I'll have some feedback on that, go over the gameplay, stuff like that, as well as some news across the space. So we have a packed show today. We'll be live in about 3.5 hours.
All righty. And when are you coming to South Africa, Mr. Hustle?
I should be there midweek next week, like Tuesday-ish, Tuesday, probably.
All righty, brother. We'll see you soon.
Sounds good, Rand.
Cool, man. All righty. And then we gave you guys permission to roast us. I don't know if you would need permission to roast us, but you guys are giving us amazing feedback. So there's a tweet here that says you have permission to roast us on Crypto Banter. Roast us. Tell us what you think we're doing right. Tell us what you think you're doing wrong. I don't think you need permission to roast us, but tell us. Tell us what we're doing right and tell us what we're doing wrong. That is it for today. I will see you guys again tomorrow. Until then, if you are trading, don't forget. In fact, don't forget. No, wait. One more thing. I'm negotiating with a terrorist again who wants the Cryptomanran.nft. You know the crypto? I showed you guys yesterday that I created these amazing shirts. And I want to print the shirts and I want to print the NFT around the shirt. And I want to call it Cryptomanran.nft. Only that some terrorist has got the domain Cryptomanran.nft. And now he wants $10,000 for the domain Cryptomanran.nft. I'm not going to give him $10,000. Obviously, I'm not going to give him $10,000. But there is a lesson here. And the lesson is that if you want your domains, if you ever think that you're going to have a use for a domain, you go right now to Unstoppable Domains and you buy the domains that you want in .crypto, .coin, .wallet, .bitcoin, .nft, .dao. So if I want to if I want Cryptomanran.nft, the asshole has it. We now want $10,000. I would have just registered it. I would have paid $20 at the time. And now I have to pay, if I want it, which now I'm not going to get it because it's $10,000, I'm going to get killed. So if you want to buy your NFTs, there is a link below to Unstoppable Domains. Just click on the link and go and buy your NFTs. Go and buy your domains, .crypto, .bitcoin. For $20, maybe you'll use them, maybe they won't, maybe you won't, but it's worth owning them. It's worth owning them. Trust me, don't negotiate with terrorists. Anyway, I will see you guys again tomorrow. Until then, trade well, my friends.